We can hear you loud and clear.
All right. Thank you very much.
Very clear, Jimmy.
All right. Thanks for that. And Wycliffe, you're saying you want your business to be registered. What's the way forward? All right, we will speak to that. Okay, let me take one expectation and then I will start the session for today. So Beatrice, you're saying you're expecting to learn of the appropriate simplified record keeping. Thank you very much. So we are at the top of the hour. It's 11 a.m. East African time. And I am going to start this session. All right, thank you very much for those who are sending in your names in the chat box. I can see there. So good morning, everyone, and thank you so very much for joining us today. My name is Jimmy Chakacha. I work for the International Finance Corporation as an IFC SME banking consultant, and I support this project together with other SME banking projects. And I'm really happy today and honored to be your moderator for the session. I'll be supporting Esther Macharia, who is our trainer for today. So we have a great session lined up for you. We will run polls. We will have a session to pick up your questions. We'll have chat box discussion, and I'll be sampling all of your comments and submissions in the chat box. And we will record this session. All your microphones have been muted and videos turned off to allow us to have a really good and easy mode of communication. So without much ado, I really want to hand over this next couple of minutes to my colleague Winnie to make her opening remarks, and then she'll hand it over to Moses Gitau from the Coop Bank side, and then also Peter will give us comments on introductory remarks, and then we'll be able to take away the session. So Winnie, if you can hear me, over to you, and a very good morning.
Good morning, Jimmy. Just confirming that you can hear me.
We can hear you and we can see you. Please proceed.
Okay, great. Good morning to you all. And thank you very much for joining today's training session. Indeed, it is a great pleasure to have you on board. My name is Winnie Mengech. I'm the project manager from IFC, and IFC is the International Finance Corporation. It's the private arm of the World Bank Group and focuses on private sector growth and development in developing countries such as Kenya. So IFC is currently partnering with Cooperative Bank to bring you a series of webinar sessions, and we'll be looking specifically at financial management. And we hope at the end of this series of sessions that you'll be able to improve your decision-making capabilities and you'll be able to run your business better. So we'll be covering different topics such as using financial statements, analyzing financial statements. You have cash flow statements, cash flow management, you have working capital management, just to mention a few of the topics that are lined up for the upcoming sessions. So for today, we are looking at business records. We'll be looking at why you need to keep business records, the different types of records that you need to keep for your businesses, how you can use them, and how you can use these records to make critical decisions for your businesses. To take you through the session will be our lead MSME trainer, Esther Macharia, who has more than 20 years experience in training and coaching business owners such as yourselves. And Esther is also an ex-banker. She has held different roles with leading financial services providers in Kenya. Of course, Esther will be ably assisted by Jimmy Chakacha, who will be your moderator for the day. Jimmy is our SME banking consultant, and he's also an ex-banker. Again, we also have from IFC, Gideon Alenga, who is an SME credit expert, and he will be attending to your questions. So feel free to post any questions that you may have on the Q&A section. At this juncture, I would like to hand over to our partners, Cooperative Bank, to make opening remarks. On the call, we have Mr. Moses Gitau, who is the head of business banking, and we also have Mr. Peter Ndumia, who is a non-financial services program manager. So over to you, Moses Gitau. Thank you.
Thank you very much, Winnie. I think as a tradition, Winnie would have wanted to start with a word of prayer. I don't know whether you prayed, Peter. Peter, do you say a word of prayer for us?
process, and let's bow for a brief prayer. Our dear Heavenly Father, this morning we want to thank you. We want to appreciate your goodness and your mercies for this session that you've given unto us to learn on using and maintaining business records. As we go through these insights, we pray that you help us understand, concentrate, and also implement in our businesses. Above all, we also pray for our customers' businesses that they may continue to grow and thrive through these times. In Jesus' name, we do pray and give thanks. Amen.
Thank you, Peter. Let me take this opportunity to welcome our customers, a team from IFC, that is Winnie, Chakacha, Esther, and the rest. Karibuni sana. And of course, my colleagues from Cooperative Bank, welcome all. And I think it's a good day that the Lord has given unto us. And as Winnie has said, we have partnered with IFC. But just before you go to the training, maybe a few remarks from myself is to say that as part of the Cooperative Bank MSME offering, and even in the advent of COVID-19, the bank has continued to support its customers. I know we have had a number of engagements just to help us equip the customers with the insights and information to survive this COVID-19. I think just to make ourselves better and to continue surviving in the new normal. It's a new normal actually. So with the continued opening of the economy, improved business environment, I think yesterday we had the president saying lifting up the curfew. We hope for a full recovery. And I think this comes in handy to help us as business people to ensure that we get back to operations. And our interactions, I think, with the advent of COVID-19 will never be the same again. Because I think most of it now will be done online. We have become more digital as a people, and I believe that will be more of the kind of engagements that we have. So we'll therefore continue with this kind of engagements. So far, specifically for this year, we have run over 50 webinars, impacting more than 15,000 MSMEs. These have been conducted through diverse topics, and I think we have shared a number of topics that we'll also be discussing. We have looked at sectors like education, we have looked at manufacturing, we have looked at people in health, we have looked at people in construction, agrovets, agro dealers, clearing and forwarding, hospitality and travel, several of those sectors. We do run this every Thursday, same time, so it's a weekly activity. And we have partnered with several key stakeholders, even opinion leaders in the market. And this has been as a result of a number of requests from our customers. Today, we are privileged to have ISC. And just as Winnie has introduced, International Finance Corporation is an arm of the World Bank. They are experts in financial advisory services. And we have worked the journey with them since 2016 in terms of developing our products through an advisory service that we did with IFC. In 2020, when COVID came in, we also ran a series of webinars with IFC. I think then after that, we went through the bank and other stakeholders, and we are now back with IFC for a series of 10 webinars that Winnie has talked of. So I think is an area that ISC has really invested in terms of expertise, the knowledge, and what have you. And I would request my customers to really attend the 10 seminars that we'll be having, so that you pick and ensure that you go implement what you'll be learning. I would also want to encourage that we give feedback through the chat box. Let's give feedback. Let's ask questions, because later after the presentation, we'll be having a question and answer. Let's raise our questions. Let's give our feedback through the chat box. And with that, I would want to welcome the IFC team to maybe take over from there. So back to you, Winnie and team.
Thank you very much, Moses, for that great remarks. So without much ado, I'd like to pass the ball over to you, Esther. Please proceed.
Thank you, Jimmy, for the introduction, and thank you, Moses, Edwini, for those opening remarks. We are glad to have you here, and we welcome you to the first course in the Financial Literacy Program. As you have heard, my name is Esther Macharia, and I'm glad to be taking you through this particular course. If you have any questions, please put them on the Q&A. And as you join the program, also for those who have not introduced yourselves, put your name and your business and your expectations on the chat box. We will be communicating through the chat box as was clearly outlined by Jimmy. So we are offering you this training in business records because we know that you have challenges in keeping business records. It is one of the most challenging things when it comes to business. And this course is going to equip you with skills that are going to help you to keep proper business records and to use them to enhance your business financial management. So what you're expecting is that at the end of the course, we'll tell you more about the other training courses that we have. You have heard this is the first course in a series of 10 courses. So we are going to have many more, and this is just let's start. Let's identify the challenges that we face in keeping records.
You may want to
Sorry,
check
Esther.
your connection.
Esther, if you can hear us, I think your connection is not very
In
clear.
keeping records. So Jimmy is going to take us through a poll. We'll have data. Yes?
Sorry, Esther, you froze for like a second.
Okay.
Yeah, but
My
we
bad.
can. Yeah, now we can hear you well.
You can hear me well.
Yes. So
Okay.
I'm going to put up the poll as you
Yes.
have mentioned. And in the next 1 second, and this one we are asking, identify the challenges in keeping business records. So it should be showing on your screen now. And the first answer there is, I don't have a full-time accountant. Mixing my personal or business transaction. Or is it, I don't know which records to keep? Or I get overwhelmed when the records pile up. I sometimes lose documents. So we would like to hear from you. What are the challenges that you have in keeping business records? And we are 30 seconds away. And as soon as we are up in 1 minute, I'll bring this one to a close and then I'll share the results with you. I see you're putting in your poll there. So thank you for that. We are 13 seconds away. And I can see the introduction is going on very well in the chat box. Thank you very much. Jojo Mondi, Sami, Grace Akoth from Nairobi, Kibra. We really appreciate that. So we are 1 minute. I'll bring the poll to an end and share the results with you. So Esther, allow me to share the results and just give you a brief summary, then you proceed. So we were looking at the challenges in keeping business records. So 18% of you said, I don't have a full-time accountant. 45% said mixing my personal and business transaction is one of the challenges in keeping business records. And then 14% of us are saying, I don't know which records to keep. 16% are saying, I get overwhelmed when the records pile up. And 7% are citing losing document as one of the challenges in keeping business records. So over to you, Esther, and that's how the results are looking.
Thank you very much, Jimmy. I hope I'm very audible now and not freezing. So thank you, our participants, for your honesty. And this course is going to help you to learn the importance of keeping.
Sorry, Esther, I think you froze again.
It is going to help you to track your financial transactions. And in this way, it is going to teach you to keep good records. It will teach you on how to keep good records. Like you have seen, a number of you are mixing your personal and business records. So course is going to help in that. And also comply with the legal requirements. There are various things that the government requires from us, and especially when it comes to the area of taxes, it is going to help in doing that. Then prepare authentic financial statements. When you are keeping good records, you'll be able to also prepare authentic financial statements that are free of errors. Then we're also going to be able to separate personal from business records. Personal records should be separate from business records, and we'll show you on exactly how to do that. We will also be able to help you to improve your business decisions. Decisions that are backed by numbers will always be decisions that you can fully rely on. So after this course, you'll be able to explain the importance of record keeping, and you'll be able to record key business transactions. It is going to be a very practical course where we are going to show you exactly how to keep the business records and also how to use key business records. So those are some of the things that we are going to look at. And now we are going to look at our agenda. For us to be able to cover all this, what are we going to do? We have already had our introduction. So the next thing that we'll do, we are going to have the importance of record keeping. We'll discuss why do we keep records? Then the key transactions to record. They are those transactions that we should always ensure that we keep in our records, and also how to use record keeping tools. How do you use the record keeping tools? And eventually we are going to conclude. So those are the 5 main things that we are going to be looking at. And I ask you that let's work together and ensure that we all participate. So in all this, let's set some ground rules. One thing, let us participate. We have our chats that are open. Participate as much as possible. Keep your comments there. And then for any question and answer, you have a dialogue box for Q&A. Put your questions there. We are going to address them at the end of the training. So anytime a question comes up in the process of, once you get a question in the process of training, just put it in the Q&A. The other thing we request is that keep your microphones mute so that we can be able to you'll be able to hear me quite clearly, and also to avoid any kind of background noise. And now we are going to begin on learning the importance of keeping records. What is the importance of keeping business records? And that is what we are going to do. That is our topic number 2. So I'll give you some time. Think of a time when your records came in handy for you. Let's go to our chat box. This is where you'll be communicating. Think of one time when the records really came in handy for you. They really helped you. If it was not for the records, then things would have gone bad. Please share on the chat box. And Jimmy is going to help us in reading out.
Yeah, thank you very much, Esther. So I will sample them up as soon as they start coming in. Okay, there you go. Hassan says when doing purchases. Okay. Thank you for that.
Share on the chat box. When did the records come in handy for you?
Jennifer says they helped when she was getting a loan for her business.
Getting a loan for her business. Thank you.
Yeah, balancing accounts, that Martin even says they helped during payment of invoices. Wow. They really came in handy. And let me take one last one and then we will proceed. Dennis says, wow, backup for loan, that's Peter Mugo. Okay, when doing tendering, that's very important. When filing for KRA returns, wow. Thank you very much for your feedback. So I'll hand it over back to you, Esther. We proceed and then I'll keep sampling them.
Thank you for sharing. That is very good. We can see how business records have come through for us. And here are a few more examples. So you find that business records, they are the basis of your financial statements. Without the records, you'll not be able to prepare your profit and loss account, or what we call the income statement. You'll not be able to prepare your balance sheet, or even prepare your cash flow statement. So you need to have the records for you to prepare your statement. So record keeping also, they aim in decision making. You are able to make decisions that are backed by numbers. You're able to set your targets very well, and also come up with strategies, either if it is cost control, to look at how the status of your collections are. They're going to help in making those decisions. Then they prove statutory and tax compliance. You know, if you ever have a tax dispute, the records will come in handy for you, because this is where you can be able to actually show the KRA. This is where my transaction came from. So it is always good for us to have those records with us. Then they minimize disputes. A customer comes to you, they tell you, no, I got goods of so much amount, and for you, you have another kind of amount. If you have a record that you even shared with your data, then they come in handy. You minimize disputes. Then they also provide basis for planning. We are towards the end of the year, and we need to set targets for the following year. The records that you have are going to help in preparing budgets. They will help you in preparing cash forecast, so that when you're looking at the following year, you don't go just by your gut feeling or by emotions. And now I want us to look at a bit of an exercise. How much can you remember without writing down? How much can you remember without writing down? And I want us to test our mental ability. I want us to test our mental ability. Be very keen. I am going to read for you. I want you to listen to this narrative. Do not write anything down. Don't write anything now down. Keep it mental. And I'll start. Hope you are all ready. Don't write anything down. Mental sums here, or mental ability. Yesterday, customer one bought 5 rugs. Customer 2 bought 4 rugs. Customer 3 bought 1 rug. Customer 1 returned 1 rug. And customer 4 bought 2 rugs. I'm in the business of selling rugs. For the sake of probably somebody who was not ready, yesterday, customer 1 bought 1 rug. Customer 1 bought 5 rugs. Customer 2 bought 4 rugs. Customer 3 bought 1 rug. And customer 1 returned 1 rug. And customer 4 returned 2 rugs. Question: how many rugs did you sell yesterday? Please put on chat. How many rugs did you sell yesterday? Put the answer in the chat.
6, 11, 10. Those are the varied answers that are coming through. So many. We have 9. We have 12, 6. Okay. George is saying you're too quick. You're too fast. Kindly repeat. Okay.
Okay.
All right. Wow.
Okay.
Thank you very much for all your feedback. Back to you, Esther.
Thank you very much. So the rugs that were sold yesterday were actually 12. I'll not repeat, because remember, we are mental. Then, how many rugs were returned yesterday? How many rugs were returned? Remember, we are in business. We are not stopping. We go on. How many rugs were returned?
Yeah, so I see again that the responses are coming. There's a majority of 3s. There are 4s. James, Elizabeth, 3, Albert, 3. Wow. So over to you, Esther.
Only 1 rug was returned. Okay, that is the first part. You know, business does not stop. Let's continue with our business and with our mental record keeping. So you can see what you did yesterday. Let's now go back a little bit more difficult. Last week, you sold rugs. Monday through Kazi sold rugs. Wednesday through Friday. to a local at a local festival. You sold 13 rags on Monday, 14 rags on Tuesday, 9 on Wednesday, 4 on Thursday, and 15 on Friday. Mchapakazi, your employee, sold 22 on Wednesday, 31 on Thursday, and 39 on Friday. The question, how many rags did you sell last week? Let's use our chat. How many rags did you sell last week?
So there's a 144, that's Dennis.
Mm-hmm.
All right. Bernard is saying we sold so many. Okay, thanks Bernard for that. Then we have James, he's saying 144.
You sold so many?
Yeah, he sold so many. And then Evans is saying 106. And the responses are coming. They're very varied. 147, 144. We have an 82. Okay.
Wow.
Someone is saying, I need to record each day to be able to remember.
You need to record each day to be able to remember.
Exactly.
Wow.
Exactly.
Okay.
So over to you, Esther.
So the rags that we sold last week, for the people who said 147, I had a 147. That is the correct answer. And probably we may go back on the background. That person must be recording somewhere. Then, how many of your days of selling last week were better than your sales yesterday? How many of your days of selling last week were better than your sales yesterday?
George is saying all. Evans is saying 2.
Mm-hmm.
Okay, 2. Steven says you need records to compare. All right.
Okay.
All right. Over to you, Esther.
So you need records to compare for most of us. Then there is that one who said all of them. Actually, all of them were better than the 12 that were sold yesterday. Then a further question, how many rags did customer 2 buy yesterday? Let's go granular now. How many rags did customer 2 buy yesterday?
So Albert is saying 4. Stephen is saying 22. And a great majority here are saying 4. Dixon is saying 2. And James is saying 13. So varied answers, as you can see, Esther.
Okay, thank you. And yet that is from just the same narrative. Yes, customer 2 bought 4 rags yesterday. Now, if you look at that, and I was to ask you, are you ready to get into the expenses? The expenses you incurred, the payments, and the different priced rags. Would you like to go that through the mental situation? Doing it mentally. Would you like us to continue further?
Judith is saying it's not possible to remember everything mentally. Okay.
Mm-hmm. Okay, so I'll also say no. I cannot keep all those things in my mind. And if you look at it, how did you feel with numbers coming at you and not being able to write it down? That you have to put all that in your brain. One thing is that, yes, the brain, even the smartest, it is not designed to compute and keep and retrieve raw data. One by one, it is not possible. So the bottom line is that we need to keep records, for our brains cannot be trusted. We have limitations as human beings, and we cannot say that we are going to keep mental records for our business. So with that, I want us to go to the formal definition of record keeping. When we look at record keeping, it is actually a process of keeping track of the history of business activities, what we did yesterday, what we did the day before yesterday, and we do this by creating and organizing and consistently storing all documents and other formal important documents. It is a whole process, and that is what we do on a daily basis. Now that we know what we need to do, because you're going to summarize the business transaction to be able to make sound decisions and also to make the preparations of financial statement easier, we need to agree on how to do the business records. How do you do it in your business? Because at the end of the day, we need to keep them. And to start that, I would like to know which business records do you keep in your business? List examples of the business records that you keep. Which business records do you keep? Just list them on the chat box.
Okay.
And also tell us how your records help you. The records you keep and how they help you.
So one of the records is receipts. That's Dennis. Sales receipts, payments, purchases, even sales receivables, sales invoices, payables, and the list goes on, Esther, as you can see there.
Yeah, that is very good. Then why do you keep them? How do you keep them? Do you keep them mentally? Are they manual? Do you have a computer? How do your records, and how do their records help you? Sorry. How do your business records help you?
Cash book, sales receipts, delivery note, computer software helps, manually done recording. So they help in mostly in decision making. That's one of the, and accountability, that's Ruth. It helps to measure sustainability. That's Jennifer. Okay, so let me sample one and then we will proceed because the feedback is so much here.
Okay.
Okay. Carry returns, receipts, payrolls, okay. And also avoiding to make double payments. So I'll hand it back over to you, Esther, and thank you so very much, everyone, for sending in your input there.
Thank you. Thank you for those responses. We see that they help us in making decisions, they help us in our payrolls, and they help us to know about our debtors. So, and we can see that the reason we keep records, it's because we get a lot of help from them. So it is important to keep records of the following key business transactions. These are transactions that you obviously get from the business. You have got the business income. When you're talking about business income, that is money earned by the business. What do you do on a daily basis to bring money to your business? That is business income. We must keep that record. Then business expenses. What you use the money for, the money you use in running your business. Those are business expenses. Then we have debtors, those who owe us money. They are our customers, and we have probably provided a service or product to them on credit. We need to keep that record. Then our creditors, those who we owe money, our suppliers, even our employees that we pay at the end of the month. Who are these creditors that we have with us? So it is always good to look at the creditors, the people or the business who our business owes money. So let us also look at the legal requirements for record keeping. What does the law require of us? And I'll just go through this cap. I'll read it verbatim. The Income Tax Act, Cap 470. This is what it requires for us, that we need to keep all receipts and expenses, goods purchased and sold, and accounts, books, deeds, contracts, and vouchers, which in the opinion of the commissioner are adequate for the purpose of computing tax. So when you get that receipt, do not throw away. When you purchase your goods, file it somewhere. Then according to the VAT Act, such records can be physical or electronic, and they must have certain information, such as the date, the tax amount, and details of products or services offered, and identify the supplier and recipient. So who supplied and who received. So in this case, records must be kept for not less than 10 years after the year of income to which the book of account or document relates. So we are talking about, we are in 2021. We should be having records up to 2011. If the law comes and probably they're asking for a document of 2009, they will not penalize you for not having the record, but from the statement you may be having. But you must keep records for not less than 10 years. The names and the type of records you keep, they're going to differ from one business to another because we all do different businesses, but the categories will always be there: the income, the expenses, the debtors, and the creditors. So in this case, what form of records do you keep? What form of records do you keep? And this is where we are asking, which system of record keeping do you use in your business? Let's just understand. And with this, we are going to go through the poll that Jimmy is going to display.
Okay, so thank you, Esther. And as we did the first poll, we are going to use the same drill. And this one you're asking, which system of record keeping do you use? Is it a manual system? Is it an Excel spreadsheet or a computerized system? So pick one there, and then we're giving you 1 minute, and then we bring this one to a close. I'll share the results, and then we will proceed. Okay, I see we are 30 seconds away. Thank you for your questions. For those who are sending in questions. Okay, Amina, you're saying spreadsheet. I've seen your response in the chat box there. Thank you for that. So we are 10 seconds away. All right. Okay, there are other responses that are coming in. I use a digital system. Thank you, Elizabeth, for that. Ruth, you're saying you're using a point of sale. Thank you. Okay, so let me bring this one to a close. I share with you the results, and then we can proceed. So as you can see there, 54% of us are saying we use manual system. 28% of us are saying we use Excel spreadsheets. And then lastly, 18% are saying I use computerized system. So that is how it looks. Esther, over to you.
Thank you. Thank you very much. Those are good responses. As you can see, most of us use the manual system. And the important thing is that you keep business records. That is the important bit. And no matter which type of record keeping system you use, you're keeping business records. And the purpose of business records is to help and assist you. So the best way you understand them, that is how you keep them. So there are two main ways of record keeping. We have two main ways of record keeping. They can either be manual. That means you're maintaining by handwritten documents. You can also use computerized, the network server, or remotely accessed via internet. So those are the two main ways. Whether you're using the Excel worksheet on the computer or you're using manual, where you're just writing in that black book that you have. So that is what you do. So those are the kind of business records that we keep. And there are very many. For the computerized records, you find that they set up the income and expense account. They can manage for you the pay bills. They can prepare for you the budgets and also tax documents. So all records should be generated and stored properly. That is the key thing that we need to remember, irrespective of the accounting system that you are going to be using. And now we are going to run something called source documents. Which source documents do we have? What are source documents? Just write in your chat box, what are source documents? How can you define a source document from your point of view? And do not be afraid to put it down in the answer. What are source documents?
So Moses is saying, giving us an example, that cash sales, receipt books. Kennedy that says receipts is a source document. Purchase invoice, thank you for that. Okay, Julius is saying receipts. Things like receipts and invoices are source documents, documents that capture transactions in an organization. Thank you, Mwendo, for that. When you get the items from or buy from. Okay. Thank you very much for all your feedback that's coming in. Okay, let me take one last one. Document with transactions information is a source document. So over to you, Esther.
Thank you very much. As you can hear from your responses, you have given examples, you have given the definition. So these are documents that support record entries. They are documents that are going to show us a proof of a financial transactions. Like one of us told us, it is where you record transactions. They are third-party confirmations of business transactions. And they are independent documents that confirm the authenticity of financial transaction, that actually this transaction took place. So source documents, as you can see, they are an integral part of record keeping, and they form the backbone of record keeping. They should be kept well. I'll keep emphasizing this for reference purposes. And now we need to get the formal definition of the source document. These are original documents that contain the details of a business transaction. Any business transaction where you find yourself, you actually get into some money that will change hands, and you write it down, that is a source document, okay? And in the source document, what you realize is that they will have a unique number, and the numbering is so sequential so that it can allow you to investigate any missing document. Then also the documents, you find that they're generated within the past year and they're generally stored on site. But the older documents, you may find some of them, you have moved them to your home in a certain cabinet. Others, you have put them in a certain store. But the ones for the immediate year, like now for 2021, we have them in our offices. So these source documents, they are very critical to the auditors, because once an auditor comes on board, they are going to be looking at them to see which transactions are conducted. They'll be used as evidence. I'll keep emphasizing they'll be used as evidence, and they are generally accepted. Though paper documentation may still be required, even if you put them on an electronic, paper documentation may be required, because the receipts we give, we probably input the receipt. So they are very useful for reference. And now we are going to go to some examples of source documents. And I saw quite a number of you put the examples of source documents that we have. But just to remind us, which are the source documents? Now that we have the definition, which source documents do you have in your business?
So just to sample what had been put in, we have invoices, purchases, sales, and then of course Frida has given us a definition there. Source document are the ones that show proof of business transactions. Mary says receipts. So thank you very much. And another one says petty cash vouchers, purchases and receipts. So over to you, Esther.
So thank you. Thank you so much for your responses. So what you find is that in our businesses, we are going to have sales orders. You have purchase orders. We have invoices when
Esther, I think your network froze. Hi, Esther, can you hear us?
credit. We are going to have a receipt form. Yes, I can hear you. Can you hear me?
Yeah, at some point you froze for like a second.
Oh, I'm very sorry about that. I think there is network issues.
Yeah.
So material acquisition forms, you're going to have them. You're going to have bank and M-Pesa statement. We do a lot of transactions on M-Pesa. It is good for you to be getting your M-Pesa statement, and that is one thing that I look at Safaricom, we are willing to provide. Also the banks, the money that is coming back to us for it. Once you get your budget slips, do not deposit the money and throw away the slip in the dustbin. Employee time card, when did the employee clock in into the business? In case there is a dispute that the employee either has not been coming to work, keep that. In case there is a dispute in terms of the money you should pay, keep that. Then the time sheets. Keep a time sheet to record the amount of time that an employee has spent at work. Okay, this is very important information, and they should always be recorded on paper. It is important for you to keep that.
Sorry, Esther.
Yes.
Maybe you can turn off your video. I think the line could be clear. Let's try that. Yeah, let's see whether it's going to be smooth. Thank you.
Okay. Am I clear right now?
Very clear.
Very sorry about that.
Okay.
So I want us to look at the information that is contained in a source document. When you look at your receipts, you look at your sales orders, what are the key features, key information that you see in those documents? Just list them down. If you're in your business, take a receipt, look at it. If it's an invoice, look at it. Remember, what are the key features that you see in that document?
Okay, so one of the features is the dates.
Yes.
That's Boniface. The serial number. Okay. Date, amount, and of course payee. Invoice number. Okay, unit price. Thank you very much. So I'll hand it over to you, Esther.
Thank you very much. So these are very important details, and they are useful in record keeping. So the main information you see in a source document, you need to have the name of the document. Is it a sales order? Is it an invoice? Is it a receipt? Document number, very important for you to be able to know which document is this. Date, the price per unit. How much are you selling one unit? The cost per unit, if it is in the case of purchase. The total amount, your document should have that. The quantity that of the amount bought, the payee, who is paying for this particular, who is paying that particular money. Details or description, what is the item or what service is this that we have given? Then the name of the customer. Who is the customer? Okay. Who is the customer? It's always good for you to have a list of your customers. So, and we are going to see an example. If you look at this business record that we have with us, you can see it can either be in an Excel worksheet, you can be having it manually, or you have it in the computerized. So you have the date, you have the item. Column 3, you have the document number. You have who you sold to, who did you sell to? This is in case of money received. The price, the quantity. Was it a cash sale or was it a credit? The due date. Next side, you look at the date, the item, the document number. Bought from, who did you buy from? On the expenses, who are you paying? Then the cost, how much did you pay for? Okay, then was it a cash transaction or was it a credit transaction? And if it is credit, when are you supposed to pay? So this document is going to help you to record all the above transactions that we were talking about. The income, the expenses, the debtors, and the creditors. And this record is going to help you to see whether your business is making a profit or a loss from your trading activities. And we'll go through it and you'll be able to see everything. So most SME business owners, sometimes they do not see the importance of separating personal and business expenses because they feel it's a lot of extra work. And now I want you to convince you otherwise. Why it is important to keep the records and for you to even be able to separate the two. But before I convince you, I want you to just share with us why personal finances and business records should be separated. Why should you separate your personal finances and your business finances? Let's write on the chat box. Why should we do that? By writing on the chat box, those who are raising their hands. So let's the chat. Jimmy, do we have some answers coming in?
Okay, so kukula pesa ya kazi bila kujua, that's one of the response from Bernard. To know if the business can stand alone, those are two separate entities. Thank you for that. To have a clear record on your business, a business is a separate separate from a legal person. Thank you for that. And the responses are coming in, very many of them. So let me sample two, and then I'll hand it over back to you, Esther. Moses is saying clarity of expenditure and income tax allocation. All right, Nehemiah says you might end up not tracking how your business is doing if you mix personal and business records. One last one here, to know if the business is making profit or losses. Thank you very much for all your comments. Over to you, Esther. Esther, are you able to hear us?
Responses to hear you. Are you able to hear me?
Yeah, I can hear you now.
Can you hear me?
Yeah, now you can. Please proceed.
Okay.
All right.
So as you can see, we need to see whether this business can stand alone. Is it making a profit? Na tuache kula pesa ya kazi. So we recommend that you separate personal from business.
Esther, I think.
And I will tell you the debating operation terms. Hello?
Yeah, I think we lost you for a couple of seconds. Maybe you might want to just log in and log back right again. We can give like a 1 minute so that maybe it could clear off how the network is.
Okay, let me just say, tell me if you can hear me now.
We can hear you now.
You can hear me quite clearly?
Yes.
Okay, I see.
Okay.
So the other thing is that you are going to have accurate cash flow management once you separate them. Then you have a very clear audit trail. You'll be able to know this money is for business and business only, and you'll be able to have a conversation with your auditors. Then business credit score. If you find out that when you're working with the bank, and Cooperative Bank will be able to tell you this, when they go to credit scoring, they will use the business account and not mostly the consumer account or the account where you do your personal things. You're going to get accurate credit score when you are ready when you separate the two. Then efficient tax returns. You don't want to pay more than you should be paying in your business by mixing the personal and business records. Because you may find yourself, you're being taxed on a personal level, and that the same taxes are also being applied to your business. So separate the two. So in this lesson, what you find that we have defined record keeping. We have seen the important role of the source document what they play, and the need to separate our personal and business transaction. This is just in summary. Now, I want us to move to our next agenda. That is on the key transactions to record. Which key transactions do you record? So that is what we are going to find out. And for you, I would like us to probably remember which key transactions, we have talked about them a bit, which key transactions should you record in your business? Just put on chat, which are the key ones that we should record? We give you a minute to just record that.
All right, so one in here, Danny says, debt is very important. Okay. Okay, goods in and goods out. That's Mary. Money in and money out, and including the date. Purchases, sales, petty cash and cash received. That's important. Date and the amount. Date and the nature of transaction. And the comments are still coming in. So I'll hand it over back to you, Esther.
Thank you. Thank you for those responses. And we can see from the way the responses are coming in. At the end of the day, we end up grouping all the responses you have brought in into various money coming in, money going out, the debts that we have, we group them into four: the income, the expenses, the debtors, and the creditors. So what you recall from the previous course that we just covered is that any person or organization that owes us money, that is the creditors and the debtors, we need to record. Organizations that owe us money and organizations that we owe money. And we need to learn how to record each of the business transactions. And we'll take you through a very practical course. Now, and for us to do this, I would like you to list the sources of income. Your business, which sources, where do you get your income from? How do you get income from your business? Which are your sources of income? Chat box, please.
Ivan says he get a income from contracts. Grace says salary. Another one says loan from a bank. Creditors. The profits, that's Jennifer. Vegetable and fruit supply, that's Dennis. Sales, and the list goes on. Over to you, Esther.
Okay. Thank you. Thank you very much for those responses. What you realize is that defining your income correctly is going to help you to record income transactions. So the moment you know what is my income, it will help you in recording. Without first of all knowing it, you cannot record. So let's look at types of income. Income, you can get income from sales. You can also get income from rent. You have a business and there is rental income coming in. You also have interest for the money that you have put in the bank. You have a savings account, so you are earning interest. That is income for the business. You also have dividends, where your business has invested in shares of other companies and you're able to get dividends. That is an income to your business. Income, we can also get it from the gains on sale of an asset. You have been keeping an asset in your business, it has depreciated to a certain amount, and you're able to sell it more than the depreciated amount. Then that is also an income. One thing I would like to remind you, loan is not an income in your business. Loan is not an income. So it is important for you to know that, so that when you're recording your incomes, you do not put your loan as part of the income. So the main income that you have is from the sales, selling your goods or services. All the other areas you find, these are supplementary incomes. So the main source of your income will be the sales. So to record your income, we do it on the left side of the business income. on the business record. In the business record on the left side, that is where we record. And we are going to look at our example, the one that we had on the rugs. Remember our rugs business? That is where we are going to record all our, we are going to go through that particular example. So in everything that we do, let's do it together. So the first thing, we need to record the date, like we see here. Remember, we need to record the date systematically. And if you note, the entries are on a daily basis to avoid skipping. Record them on a daily basis. You wrote receipts, keep them aside, and then you come to the area of recording. Then all the sales are related to the sale of rugs. As you can see indicated, that is the item number, that is the rugs. Then the document number, remember all the receipts that you gave out. We have receipts like now, receipts 1 to 13 to various customers, receipts 14 to 27 to various customers. This is our recording in our rugs business. And receipts 25, receipts 28 to 58 to various customers. Then on top of that, we have the customers we sold to on credit, and we have invoice number. We now come from a receipt. Receipt, we received cash, but we go to the invoice because we sold on credit. So you see who we sold to, cash, you may have your various customers. Every time you give a receipt, you write, but when you come to recording, you record them sequentially. So you have the price, the per unit, then you have the quantity and how much cash did you receive. For the credit sales, ensure you write the name of the customer you sold to. Here we sold to BD, 35 rugs. We sold to Mapesa, 54 rugs. And then we have our credit amount. So in this case, you find that we have our cash, which was 162,400. And we also have our credit sale, which is 249,200. I want you to note there is a due date for the credit sales. We are giving BD and Mapesa, they should pay us within 10 days. So we sold to BD on 12th of August. We want the BD to pay back by 22nd of August. To Mapesa, we sold on 13th. They should pay back on 23rd of August. So we have our credit sales and we have our cash sales. We have them all together. So if you see at these records, it's already giving us some information that can help us in making decisions. And now let us see in terms of summary. Let's see in summary what we have. Here we are. We have our total cash sales as 162,400. Our credit sales, 249,200. So our total sales is 411,600. I want us to go further and look at the percentages. Out of the 411,600 that we sold, 39% of the total sales were in cash. Because we were able to record, we are able to see this. Credit sales, 61%. I'd like to ask you a question. Looking at the percentage indicated above, is there a potential problem? Share with us on chat. Is there a potential problem for this business? Jimmy?
Yes, so Jennifer says, yes, there is a potential problem. So is Moses saying yes. And the yeses are very many, Esther.
Okay. So,
Dixon. All right, over to you, Esther.
As you can see, thank you for those answers. And I totally agree with you. There is a potential problem. Most of our sales are coming in credit sales. And this could indicate that eventually we may have a few problems in terms of cash. Yes, we are making sales, but the cash is most of what we have sold is out there with our customers. It's on credit sales. So I want us to go further and look at some expenses. So let's look at the expenses record. So we need to identify some expenses in our business. we need to identify some expenses. Let's list down the expenses we have. Which expenses do you incur in your business?
Yeah, so Esther, maybe as we wait for the expenses, there were two comments that came in previously that yes, there was a potential problem because business does not have cash at hand, and there was the risk of liquidity to run in the business. So moving on now to expenses, rent is taking the lead here. And of course, we have transport, payment of staff, rent, salaries, and of course, the list goes on.
Have rent.
So over to you. Okay, so there is still commission, taxes, wages, local travel, and of course, airtime. So over to you, Esther.
Thank you very much. So we have rent, we have airtime, we're going to have salaries with us, and these are the expenses that we're expecting. And I thank you so much for that. And I also thank you for really realizing there is a problem in that business and there is a probability of a cash issue. So the expenses, these are the cost of running our businesses. And mostly expenses, you find them in direct cost or indirect costs. And these are what we call our operating costs. And you're going to go through them. The direct costs are the ones that go in production. And then the indirect costs are the overheads. Then you also have non-operating expenses. And you're going to look at all these. So when you look at the operating expenses, okay, in operating expenses, we have costs like the direct cost, which are for production. And in production, even in manufacturing, you're going to have the raw materials that you use in manufacturing. We are going to have production wages for those who are doing production. We have direct purchases that are involved in the process who are actually operating the machines or the factory manager. And we have the fuel that is consumed in the business. Then after that, we have indirect overheads. Our indirect overheads, or what would call the selling, general administrative, and also our advertising costs. We have general cost and the administrative cost. So we have our selling cost. This is where you get the salaries, sales salaries for your sales managers, sales commission you may pay, the travel that comes from the people who are going out to market, the distribution, those are our selling costs. Then we have the general costs. These are the rent, the office supplies, the airtime, the utilities, insurance in the company. Then we have our administrative cost, the salary for the CEO and the other admin staff, sorry, the legal expenses, the accounting that you pay the auditor. This is what we call the indirect costs or the office overhead. A group cost is straight what for the SGA. Then if we go ahead, we go to what we call the non-operating cost. And I would like to hear from your businesses, the non-operating expenses that you have in your businesses. Just list a few. We have looked at what is the operating expenses. Which are the non-operating expenses that you have? Jimmy, am I audible?
Yes, at some point we lost you, but you're right back on. So let's hear non-operating expenses. Jennifer says time. Okay. Right. Incentives.
Non-operating. Mm-hmm.
Mm-hmm. Okay. So, all right. Elizabeth says water bills and electricity. So thank you for that. I think I will pick them up as we proceed. Over to you, Esther.
Okay, thank you. So we are saying the non-operating expenses that you have given to us. I would like to set it very straight. If the water bills and electricity bills, they come at the administrative cost of the business. And now that is just for correction. And we are going to look at the non-operating. And I want you to look at them. They are expenses that most of the time we don't think about. And sometimes they fall through our fingers. We have the interest that you pay for your loans. That is a non-operating expense. Then we have the financing cost. When you go and you are told that you have a loan, and this loan, on top of the interest, you have the negotiation fee. And you also have issues to do with the ledger fees that you pay. Those are non-operating costs. If you are doing business across the borders, there is the foreign exchange losses. That is a non-operating cost. When you sell an asset in the business and you incur a loss, that is also a non-operating expense. Restructuring expenses. There is some restructuring you need to do, and sometimes you need to pay for people to go, or some kind of process that you are changing. That is a non-operating expense. A lawsuit settlement, you went to court and the court told you there is some money that you need to pay. Then you are also dealing with a non-operating cost.
Esther, we lost you.
You pay to the government and not operating costs. They are non-operating costs. And that is where you ought, oh my, am I on? Hello?
Now you're on.
Hello? Am I on? You lost me at what point? The lawsuit settlement.
Yeah, exactly there.
Okay. So anytime you are told to pay a lawsuit, that is a non-operating cost, and also the taxes that you pay to the government. Okay, that is where you hear profit before interest and taxes. After that, there is operating profit, profit before interest and taxes. Whatever comes out at after the operating profit, then all those are non-operating expenses. The other thing is that we need to keep our expenses record. And I want to show you how you do it. Like we are the item, we have the document number, who did you pay? Bought from or paid to. We have the cost. We have the quantity, cash, credit, and due date. Let us keep it like that as you're showing. And now let's go to our rags business. We'll go back. So we need to record all this systematically. So this is what we have. For us to sell the rags, we also bought. So on 16th, we bought rags. And we bought 147 of them from Quality Supplies. We have the payment voucher number, PV 103. And we paid it was 1,500 per rag, and we paid cash. We were not given any credit. Then we have our employee Mchapakazi that we had sent to a certain expo. That is payment voucher 104. Mchapakazi, we were paying them 30,000, but we are not paying cash. We are going to pay Mchapakazi on 30th. That is at the end of the month. Then we have the rent. Rent, that is payment voucher. If it is city council or the council of your county that are being paid, they like cash, they don't give you credit. There was a 5,000 that was paid. And we can see how we have recorded. So what you see is that the total cash payment was 225,500. That is from the rags and from the rent. And then the wages we are going to pay at the end of the month, and we are not yet there. 30,000 to Mchapakazi. So you can see the information that is there. So if you look at this, what does this information tell us? Ed would like to summarize this, our expenses. Remember, this is a whole business records we are doing. We see our total cash expenses, the 225,500. Our credit expenses is 30,000. So our total expenses, we get 255,500. Now let's do a summary in terms of percentages. This is what we have. We have 88% as cash expenses, and 12% as credit expenses. Now, I would like to ask you, I want us to go back and compare. We had our cash sales, 39% were on cash, and 61% were on credit. Now, looking at all these percentages, could the above percentage, are they indicating a potential problem? Is there a potential problem that we are foreseeing? Jimmy.
Yeah, so there is a problem. The yeses here, and Tom is saying there's a liquidity problem. Thank you for that. Okay, Stanley, yes, there's a cash flow problem. That's Robert Moema. Thank you for that. So yes, indeed, our participants are saying there is a problem. So over to you, Esther.
Thank you so much for your responses. As we can see, there is a potential problem. The bulk of the business sales are credit, while most of the payments, they are made in cash. Imagine you did not have a business record. So there is a potential cash crunch. And you need to see that this business needs to rationalize their credit policy. And it is therefore very important for us to look at the debtors and the creditors. And I want us to start with the debtors. So a debtor is that person or company or organization who owes your business money. As a business, they owe us money. And I want us to extract our debtor record from these sales. You can see these are our sales. This is our debtor record. Here we are. So from what we can see in these columns that we have highlighted over here, we see that BD, one of our debtors owes us 98,000, and Mapesa owes us 151,200. So in total, both of them, they owe us 249,200. And we see that for us, we have given them 10 days to pay us. They are enjoying 10 days without pay. So if you have to look at it, now, this is credit that we have given to us. So let us look at the credit that our business is enjoying on the other side, okay? Let us see. If you are to look, and when you're talking about creditors, we look at our suppliers, we look at the staff, we look at our service providers who probably wash our offices, the statutory bodies that give us a bit of time to pay probably some taxes here and there, the bank, and also the business owner who sometimes may lead to the business. And when we look at it, look at our expenses here. We see that in terms of creditors, we only owe to Mchapakazi, and this money is payable on 30th of August. So if we did our transaction on 17th of August, Mchapakazi has given us 14 days to pay him. So to get a very clear picture on the credit management of this business, we are going to compare the debtor days and the creditor days, okay? So we see our debtor days, we have given our debtors 10 days to pay us, and our creditors 14 days. That is, Mchapakazi has given us 14 days to pay. So what I would like to ask you, from just looking at this, is the credit management good or bad? Give us your yes or no. Is the credit management for business, is it good or is it bad? And also give us the reason for your answer. Why? And remember, as we go along, put your questions in the Q&A. Jimmy, do we have some responses?
Yes, indeed. Evans is saying bad because of the timing. Robert says it's good. Elizabeth is saying it's good. Furaha says it's good. We are able to receive before our payment is due. And then lastly, it's bad because it may not sustain the business in the future. So they're both good and bad answers in the chat box, as you can see there, Esther.
Okay, thank you very much. Thank you for your responses. We can see there is yes or no. When you're looking at the debtor days and the creditor days, we can say our credit management here is good. And this is because we are collecting cash from debts faster than we are paying our debts. We are collecting from our debtors within 10 days, and from our creditors, we are paying our creditors in 14 days. So there is a 4 days difference. And what we are going to see this so clearly when we cover the working capital management class. We have a class that we are going to cover working capital management, and you learn more about the debtor days and the creditor days. But when we are collecting our debts faster than we are paying our debts, it's usually good for us. It's a delicate balance, and we'll be able to explain it more as we go on to the other classes on working capital management. Now, that is something to leave you to know that there is a class coming up on working capital management that we are going to look at. But for now, let us look at our next agenda on the record keeping tools. Okay, so we have learned on how to keep the business records so far. So let us look at the tools. And the tools we'll look at is the business record itself. We have seen how to record the income, the expenses. Let's look at the business record and the cash flow report. And we'll go with our example. Here is our complete business record. We have combined the income, and we have also combined the expenses. And what you notice is that we have already completed the whole business record, because we have done the income and also we have combined both of them, and it is good. So if you recall what we looked at, the total income that we are getting in total is 411,600, and our total expenses is 255,500. Okay, you have them here. We are getting credit sales plus cash sales to get 411,600, and our credit expenses plus our cash expenses, we get 255,500. So in simple computation, this business, if you look at it very simply, just getting our total income and our total expenses, are we making a profit, and how much? Are we making a profit? Are we making a profit? Somebody who has calculated the profit?
Yeah, Dennis is saying yes. However, there are comments that had come earlier. Steven says negotiate with the creditor. That's Steven's opinion. But of course, there's another yes from Robert, yet that indeed we are making profit. Ntabo says yes, though in credit. There is a no from Peter and another yes from Francis.
Okay, so we can see we are making a profit. And if you are to be asked, would you continue with this business? There is a profit because we have a profit of 156,100. That is 411,600 minus 255,500. As a business person, would you continue with this business?
Yeah, so Robert says he will continue with the business. So is John. So the yeses are many, that they will indeed continue with the business. Yeah.
So we say we continue with the business because we are making a profit. Okay. However, there are further considerations that we need to take into account for us to determine the profitability of the business. And in one of our upcoming courses, That is what I don't want you to miss. This is just the beginning. We are going to learn about profitability. And you'll be able to differentiate between profit and profitability. Right now, we say we can continue with the business because it is making a profit. We need to move on for further consideration. What is the profitability of the business? And for that, we just have a sneak peek at the cash flow report. And when you're looking at the cash flow report, it is going to help us to assess the cash health of your business. And this report will allow you to record your business cash flows. And it will help you to record all the cash transactions that have taken place. And we are having a full course on cash flow management and also loan management that is going to help us understand this concept further. So to maintain the benefit, to just look at how much cash is there in the business. In this report, we only record all that has been there in cash. So we are going to extract our cash balances from our business records, okay? So all the cash that is coming in, you find it on the left-hand side. That is what is coming in, cash inflows. And all the cash outflows, we find them on the left side, which is on our expenses side. So we'll be able to know what is our cash inflow and what is our cash outflow. And when we subtract the two, we are able to know whether we have a cash surplus or a cash deficit. Then what we do, we are going to add any cash surplus that we have for the current period to what we opened with at the beginning. And I want us to actually look at this cash flow statement that we have. Let us assume at the beginning of August, what we carried over from July, we had 50,000. Then in August, these are the kind of expenses that we have had up to on cash from the RADs. I hope my internet is stable. Have I lost you?
Yeah, it keeps coming and going, but I think it's okay now.
Okay, so we had cash inflow from the lands of 162,400. Then we also bought our RADs at 220,500 on cash and rent at 5,000. So our total cash in was 162,400 and our total cash out was 225,500. If you notice, we are only recording cash items. So if you look at the kind of surplus we have a deficit just from the few months from 1st of August to 17th of August. We have a deficit of 63,100. And even if we add the cash we opened with in July, we have a total deficit of 13,100. Now, I want to ask you, is the business cash flow healthy for this business? Our business of selling rugs, is the business cash flow healthy? Is it healthy?
So we are seeing no, it's not healthy, and the no's are taking the lead here.
Okay, so we have a no, because the business cash outflows, they're exceeding the cash inflows. And that is why you find yourself, we are running a business, it is making a profit, but you do not have cash with you, because the cash outflows are exceeding the cash inflows. And you're going to look at, we have one of our courses on cash flow management, where you know, how do I manage my cash so that I can make a profit and still have cash with me. So it is possible for you to have a business that is making profits, but you don't have cash with you. And this is where you ask yourself, where did the cash go? And we'll look at that. So what we see is that keeping good business records, they're going to help you spot the cash flow problem early enough to be able to correct it. When you keep them like this, you'll be able to spot that cash flow problem. And now with this, I would like us to conclude our course because we can only take so much. There is so much to talk about, But for today, would like to conclude here. And with that, I would like us to revisit our objectives, okay? And looking at what we have learned through this webinar, I would like to ask you, okay, these are the things that we have been able to learn: the importance of record keeping, how to record the business transactions, and we have done it with an example, and how to use business records. Now, I would like us to go to our chart as we conclude. Write why keeping business records is important from what we have learned today. Why is it important to keep business records? Let's get some answers on chat.
Okay, so we'll wait to hear. For accountability purposes, for future reference, to monitor cash flows. Thank you very much for that.
Thank you very much for that. Monitoring purposes, to monitor the cash flow. That is very good. Then I'd like to ask, which are the key business transactions from what we have learned today? Which are the key business transactions to record? Let's see if you can remember the key business transactions to record for us to record.
Okay. Sales is one of them.
Yes.
Cash in, cash out.
Mm-hmm.
All right. Cash in, cash out, debt sales, cash inflows, income and expenses. All right. Thank you guys for that. Over to you, Esther.
Thank you. Thank you very much for that. We can see we need to always record our incomes, be it in cash, cash in, cash out. We need to record our expenses, no matter how small, the debtors, the people who owe us money, and the creditors, the people who we owe money. Then, which are the two key business records? Two key ones. Which are the two key business records we should keep?
Okay, so one says debtors and creditors, another one says sales, expenses. Thank you, Grace, for that. Karani says sales and expenses. Those are the two major key business records, okay? Cash and debts,
okay.
Cash in and cash out, income and expenses. Thank you very much for that. Over to you, Esther.
Okay. Thank you very much for that. And we combine the two into a total of, we should always keep the business record that shows us the income and expenses. And then on top of that, we should have the cash flow report. The cash flow report with us. We should have that. And for us, since we have gone through all this, we need to have a course of action. Let's have a course of action. So you need to set a course of action. You reflect on what you have learned on this course, and then just from the chat, just write 2 new ideas that you're going to implement once you get out of here. What are the 2 things that you're going to implement in your business? 2 things at the end of the day that you're going to implement in your business.
Okay. Record M-Pesa transaction is something that Grace is going to implement. Never rely on mental records is something Judith is taking away. Clear records for sales and purchases. Keep clear records, cash flow records, to start keeping proper business records. Okay. Compare cash and credit sales for profitability. Improve on how to recover debts. Okay. And the responses are so many, Esther.
Okay. So at least there is something that you're going to implement in your business. So what I will urge you, implement and practice the ideas that you have learned today. We have seen it is very easy to keep a simple business records so that at the end of the day, your record keeping is enhanced. You know, when your business is making a profit, when you're running out of cash. So let us go implement and practice on a daily basis. Get that half an hour or 1 hour after you close your shop or after you close the business to look at what you have done in terms of records. So We are going to look at the other courses that we are expecting after this. Okay. Today we have covered business records. After this, we have the other 9 courses we'll have understanding your financial statement. After the business records you have done, let's understand our financial statement. Then we'll also learn how to use the financial statements. Then remember our topic of profit and profitability. We will have a full topic on profitability. Then remember the issue of the cash flow. We are going to have a topic on cash flow management. Then there is working capital management. We have put it in 2 topics because this is actually almost like the heartbeat of the business. So we are going to cover working capital management in 2 topics. Then definitely we must cover loan management. How do you manage loan? When do you take the loan? We'll have that particular course. Then after all is said and done, we have savings and investment. After you have made the profit and your business is profitable, where do you put your savings and how do you invest? So we have 2 lessons on that, on savings and investment. And that is what we are going to be doing. So what you're going to do at this moment, I will request you that we complete an evaluation where Jimmy is going to give us a link on where we can do the evaluation as we go along, and we welcome questions also. Just do the evaluation. Give you 2 minutes to complete the evaluation.
Esther, thank you very much for such a great presentation. And it's our belief that we've spoken to all the expectations that we had set up in the beginning. So as we click on the poll to get your evaluation, I'd like to read out some few questions which, Peter, you can comment on. And then we will move straight ahead for closing remarks because I can understand we are 6 minutes out of time. So, and I'd like to thank our team. Winnie and Gideon have been able to respond to all your questions that have been put on the Q&A. So let me just take one here, and maybe Peter, you can put a comment on that one. Judith had asked, how does Cooperative Bank support loyal customers to grow? Maybe you can put a comment on that one, and then we'll take another one. Then we can bring this one to a close. Over to you, Peter.
Thank you so much, Jimmy, and thank you so much, Esther. I hope, Jimmy, you can hear me.
Very well, and we can see you.
Thank you. Thank you so much. I think we've gone through a very nice and very informative session on maintaining and using business records. And as just indicated, we will be able to address maybe 2 or 3 questions that have come through. Many thanks to customers because of the level of engagements that we have seen on the chat, and even giving us the feedback and the lessons that you've learned. Going to the question that have been by Judith on how then do CoopBank support our loyal customers. And I want to say this, that one of the things we have really come through to support our customers is on what possibly we have started to do. We have 2 elements of support in terms of financial support and the non-financial support that we are giving to our customers. When I talk about the financial support or solutions that we have, is to say, then we have, financial solutions. We have loan when it comes to working capital needs that you have for your business to help you to grow, because we understand that every business needs to, to grow. And I've just gone through the training by Esther. Cash flow management is key, and I think one of the things we really support our customers, that we have made it very easy for us to qualify for loans, and so we come through in terms of that. I think we also have other solutions, the digital solutions that we have also supported you with, to make sure that then it is very easy for you to bank and make collections, and also access finances, including the mobile loans, the e-loans that are very easy for you grow. So I think being loyal then says that then you have solutions that you have that support you on the same. Now, the other aspect and the other element is on what we're doing, the non-financial services. Part of the program the bank have rolled out is to give you non-financial benefits or the solutions that will add value to you to help you manage your businesses better, because if you don't manage our businesses better, then it becomes difficult for us to grow. And that's how we have rolled out series of trainings, webinars. We've done more than 50 webinars so far. And we have a series of other upcoming sessions that we continue to provide. I think that's one of the things I would want to summarize in two ways, that we have both financial and non-financial solutions. I've seen that, Jimmy, you have uploaded something on the MSME packages. I will not, I think because of time, we may not have to go through this, but one of the solutions and one of the financial solutions that we have as a bank is what we have called the Core Bank MSME packages. And these Core Bank MSME packages are accounts that comes in form of bundles. They have several solutions. We have the bronze, we have silver, and we have gold. And for any person who is in business, any entrepreneur who is doing business, I think depending with the level that you are in, you should either be in bronze, silver, and gold. And they have benefits, and I think, including the unsecured facilities that we have just indicated down here, that you were able to get up to 600,000 unsecured loan facility, even bronze package. And this one can actually even go higher if you're using whatever the e-loans or mobile loans, that you can actually go to up to 1 million. So then there's a silver package that also supports you to get even a secured facility of up to 6 million. And of course, the gold package that gives you an opportunity to get unsecured facility of up to 10 million. I think this is part of the support that we really come through for our customers. Of course, they have benefits, they are cheap, they are easy to manage, and they are customized for business customers. So maybe I want to wrap that question in terms of that, Jimmy, as maybe you want us to go to the next part of the question.
Yeah, Peter, thank you very much. And the way you've responded to that has spoken to the other question that I wanted to ask. So I think it was around loans and assets, which was in that presentation, and you've really made a summary of that. So I wouldn't want to go back to that. So the other questions have been responded to in the Q&A section with Winnie and Gideon. So thank you very much for that. And I don't have any other questions from my end, really, Peter, but I'd just like to say a very big thank you to all our participants. You stayed with us from the beginning up until now. You've taken time from a very busy schedule to be able to get understanding and on the business records training. So we are very much grateful for that. So without much ado, I'd like to hand it over to you, Peter, for the closing remarks, and then for Esther also, and then we'll bring this one to a close. Thank you very much.
Thank you so much, Jimmy, and thank you so much, IFC team, for really that support that you've given and gone an extra mile to train our customers and give them insights that are really very beneficial to them in their day-to-day running of their businesses. I think for us is to really thank all of you, our customers, for being together with us in this session. And I know, and looking at the names that are in this session, we've seen consistent names that have never missed our webinar sessions. And I think meaning that we are getting something, and our call is to request us to continue to implement on some of the things that you're getting. We really appreciate all of you for even giving us business, and we hope that we continue to partner to do business together. I think the other thing is to also really appreciate our trainer for the day, Esther. I think, Esther, you really captured the training very, very well, and the insights that you've shared, practical, and I know we'll be having you in the next 9 sessions. So just to encourage our customers to attend and ensure that they be part of this session so that we also, learn the other part of the presentations and the sessions that we'll be having. I think the other thing is just to say we hope to meet you. Thank you also, Jimmy, for great moderation. Thank you so much, IFC team, for the support on this. Moses, if you can hear me, I don't know whether you have any comment or we could close. Moses Kitawa, Head of Business Banking Department. All right. Maybe he has just stepped out, but thank you so much, Jimmy. I think we are through, and we could possibly meet in the next part of the trainings that will be coming. Over to you, Jimmy.
Thank you very much, Peter, and over to you, Esther, for your closing remarks.
Thank you very much. I would like to thank our participants for you have really made this particular session and the kind of responses that you have given to us, and we look forward to having you for subsequent sessions where we are going to learn much more from where we were at. I would like to apologize for the few hitches here and there, and we hope that by next time, all will run very smoothly. In case you have any questions, you can contact CoopBank for further questions and probably suggestion on topics that you'd like covered. We thank you. As from the IFC side, we are so grateful, and we take it back to Jimmy and hope to see you next Thursday. Thank you.
Thank you very much, everyone, and have a good day and a good afternoon. Goodbye for now.
Thank you. Thank you. Thank you, Jimmy.
Thank you.